I've been coming to California for about 20 years and I don't think I've ever seen it rain this much. It's usually sunshine every day. So what's the guaranteed way that over time that you will underperform the average index, whatever it is that you are investing in, whether it's the ASX 200, whether it's the S&P 500, whether you live in Europe or whatever? Well, the controversial answer to that question is to have a diversified portfolio. Now, before you attack me and before you say, Andrew, all financial planners and all of the greats all talk about making sure that you're diversified, Ray Dalio and Sir John Templeton and all of these types of guys say you've got to have diversification. What these guys are talking about is diversification for people that don't know what they're doing. Every great investor, I just finished reading, as many of you know, Richer, Wiser, Happier by William Green, and I highly recommend you go and buy that book. But William Green talks about in that book the greatest investors of all time. Warren Buffett, Charlie Munger, Howard Marks, Joel Greenblatt. Are these guys diversified? Well, the answer is no. They're not diversified. They've made their fortunes from taking very concentrated bets. Bets in businesses that they understand. Bets in markets and companies that they've done due diligence on. And here at Trading Mastery, what we teach, and the reason why we've had so many successful clients in the last couple of years since we launched, is because I show people how to own a concentrated number of businesses that are likely going to outperform over the course of a period of time, and just sit on your hands and do nothing. So, my portfolio has grown over 90% in the last 2 years. And that's not because I've bought the world's best businesses. It's simply because I've bought some of the world's best businesses at the right time, at the right price, and simply sat on my hands and done nothing. And continue to own a concentrated portfolio of wonderful companies. Now, I agree 100% that if you don't know what you're doing, then you should just simply own an S&P 500 index ETF and you're going to get the average of what the overall market does. But do you want to live your life average? Do you want to retire at 70 years of age on a pension and not have enough? Or do you want to actually be able to generate a wonderful return on investment, better than the index average, better than any fund manager? It's not difficult. It's not rocket science. All you need to do is own a concentrated number of companies and not be diversified.